Hey, good morning, everybody. This is Vance out of Seattle, Washington. Welcome to my morning Forex trading show. Let me mute that background TV there. I got some following a little bit of the markets there. Welcome to my live Forex trading show, and also welcome to all of our new members. We had opened up our program the past week or so, and we had quite a few new members. But just a quick word out to you guys. In level one, I want to encourage you to engage as quickly as you can. Also, focus primarily on getting in and out at the correct prices for your labels and orders. It's pretty much 99% of the market has no idea that, well, that's even important, so they're not even trying. But it is important. But that's the main objective of level one. Those who do well also ask a lot of questions. So if you have a question, ask. So welcome to the team, and I look forward to working with each of you. Our training is going to be closed for a while. But write to me if you're listening in and you're interested in learning more about it. The pricing and descriptions are all going to be very different. Okay, so let's get started. To see more of what I'm talking about, I want to show you guys something real quick. If you come in on the show and you click here, first of all, before I say that, right here, if you're coming from YouTube, you're probably looking for 8 things, my 2 free books. You can get those here. Just put your name and email and you'll get access to those. I'll also show you another way to get to my website in just a moment. If you're looking at the video player to join the show and you click on it to play, there's going to be a thing pop up there that says be part of the conversation. If you click on that, you'll be able to see more of what I'm talking about this morning. Okay? So, all right. Now, this is the link to my website if you want to get the free books. And this is the link if you want to follow me on Twitter so you get a little tweet out a little bit before the show starts, maybe a few minutes, and that way you know roughly what I'm going to talk about and what time it's going to start, because I don't have a set start time. Trading and students are my priority, not the stuff that I do for the public. So anyway, that'll tell you when I'm going to do it, and I think you'll get tremendous value out of following my show. But that's something you ultimately decide. All right, so let's drop out of there. And I want to get started with price. I did take a look at fundamentals quite a bit last night. There are some things going on in the world. There's a lot happening in Brazil. Russia's got some rumblings going on. Ebola got a new infection in the United States. But I think overall, the markets are pretty solid this morning. So I'm going to just move into price. Now, today I just want to talk about buyer-seller high probability advantage. This is something I do pretty much every time I look at price. If you follow my show every day, you'll notice that I'm always looking for key levels where the buyers or sellers will gain a high probability advantage. And the reason for that is we're only doing actually a few things in trading. One, we're able to identify when the buyers or sellers have a real advantage. And two, we're looking at being able to gauge and trade. We'll say gauge the strength of that advantage, and to gauge it in such a way that we can see whether we can get in and out of that trade with good risk management. So you've got the high probability advantage, you've got the strength of the advantage, and then you've got your risk management. And then of course the final piece is you have to have the execution skills. And so, but when it comes to reading the chart, it's very, very simple. Do the buyers or sellers have a high probability advantage, and how strong is it? Now, the reason why it's important to have a high probability advantage is because if it's not a high probability advantage, what makes it that way, what makes it a high probability advantage versus a low probability advantage is a high probability advantage is in the 70% win category. So something that I'm showing you has to be 80, 90% correct in terms of anticipating the direction. So when I say price has got to move above 2707, if it does with any strength, you've got a 80, 90% probability that the move is going to continue in that direction. All right. So this is all part of putting together a complete setup that is high probability. So, so really very simple when it comes to reading charts. Now you'll see if you follow this, I'm doing the same things, pretty much, 7 or 8 things over and over again. And so you'll pick up on those if you watch. All right, now I've identified the key levels here. First of all is a 76.4 level. And usually it'll be where these moving averages will cross. The moving averages just loosely represent the amount of money that's committed on the part of buyers versus the amount of money that's committed on the part of sellers. And so we don't just use the moving averages. I say, okay, well, the really key level where the buying and selling contracts are likely to basically head off at 50% in both directions is 26.62. So if price moves down through here, then the sellers have a high probability advantage. Now on the top side, even though the balance is to the top side, you can see the 21 is above the 55. With all of this selling interest, since this price has already got exhaustion down here, with all this selling interest in here, it's going to be very choppy. You got buyers and sellers. So they need to move above 2707 to discourage those sellers, right? So that's when it starts to be more of a higher probability that it's going to continue up. You basically take the wind out of the sellers. So that's what we're looking for right now. This is lots of buy and sell orders in both directions until we get through the 26.62 on the bottom or the 27.07 on the top. Now, looking at the pound, looks like it's going to give us an opportunity to take a little closer look at something. You see the same thing today. I've got a 60, 65 level on the bottom side for us sellers to gain an advantage. I would also take note of all of this right in here. Looks like there's some, there's probably going to be some buyers in this area. Probably if I was just going to use some of my experience here, I'd probably grab this and throw this on here just like this. And so probably a lot of buyer interest right in here. And, we'll probably talk about that tomorrow or whenever they get there. But the thing that you probably really want to be watching for here right now, showing this buyer strength, is this move above 61.12. All right, so now notice that the 30-minute candle closed a little bit higher. So I'm going to move that to 61.13. Now what we would do, so if they move above that, we've determined a high probability advantage. In fact, let me just go back to the previous level, which was a pip lower. It's done nothing significant to break above that, but I want to go ahead and drop down to a 5-minute chart. The reason why we look at a 5-minute chart is not to trade short term. It's to look at the behavior. So you can see right here, you see this move up, down, way up and down. So there was a move that started right here, and it was 24 pips. And usually what we'll see is where price reconciles at the 5-minute candle body is where it will tend to push again. So you see what happens here. It comes up here, it pulls back to 38.2, just like we expect it would, and it makes a second push, but not to the top, but more in the area of where that 5-minute candle resolved. And the reason why that's important, it's not the 5-minute candle, it's just over a period of time with the buyers buying and the sellers selling, that's where they kind of ended up right there. And so, with all this strength, it doesn't surprise me it moved a little bit higher, but this is usually where they'll push again. And you can see it reconciled again right in this area, or at least opened there, touched off there again. All right, so moving back down back up to the 30-minute, we'll just adjust that there. We'll get rid of a little muck on the screen. And so we're looking for a move now above 61.14. And so dropping down to the 5-minute, what you would want to see is you want to see price move above this place, 61.14, with enough strength and without pulling back, so you can get, so when it does pull back, you can get in and out with good risk management. Now again, the lower figure doesn't seem to matter right now. It could develop this morning. Mondays are usually slow, but it's 47 pips to that level, and we're likely to get some buying interest at that level as well. So, we don't have a lot of time to pull off anything meaningful there. Let's go ahead and take a quick look at the Australian dollar. You can see there's exhaustion on this top side here. 1, 2, pretty much the last attempt at this level was very weak. So that as it starts to fall off, that tells you that it's more bearish. And so what we're seeing right now is price begin to move through here. Now let me put a fib. This is something. Okay, so what I'm going to do is I'm going to adjust this down to here. This is, well, it's showing us that this is the key level. You see how price is just bouncing right off that line that I have, holding there again. So that 87.92 is the key level. We won't get the moving averages closed turned over, but I think this is where the sellers have an advantage. And I could actually drop that. Well, instead of dropping that key level down, just notice that there are buy orders sitting right in here. So we've got to get right through this level before the sellers will have a high probability advantage. But keep in mind that trading the Australian dollar or the Kiwi is going to be a little bit risky, especially for those who learn from me, because they move differently. There's different criteria that affect their overall logic, but we trade it just to have extra practice. Quick look at the Kiwi. Change to a 30-minute chart. See what we got. Maybe zoom out once more. It looks very similar to the Australian dollar. 78.81, and then we can get an easy fib on here and be able to identify the key level on the bottom. I do suggest you wait for those moving averages to turn over. I'm going to trump my own fib line here, and I'm going to say that the key level is right here. That's where it's got a lot of support. In other words, there are buyers sitting there. So that's your two levels there. Okay, so let's get rid of that, get back to our pound. We can see those levels pretty well. Let me see if there's anything else I want to cover this morning. No, I hope you got just one idea that helps you with your goals in Forex trading. My next show will be Wednesday. I have to be somewhere earlier tomorrow, but I will publish some analysis at forexartofwar.com, so you can get the same read on price. To our members, I'll see you guys coming up for the Wall Street Open in about 20 minutes for our live trading room. Thank you, everyone. Have a great one.